Another month of shopping. All stocks seem to be heavily discounted at the moment. Far too much choice. I'm still continuing to build on positions and lowering my average buy prices. My portfolio now is $46,537.76. It's dropped off in the last few days. Still a 0.57% increase from last month. In this video I'm going to go through my November purchases as I continue to build on my stock positions. My name is Alex and this is Dividend Income. As usual, I will go through it alphabetically. First up is Apple, ticker symbol AAPL. I purchased one share for $167.25. This one share takes a total to 23. I have an average buy price of $130.19. I'm hoping it drops so I can pick up a few more. Apple shares initially tumbled in price at the beginning of September, after news broke that China announced bans on government employees using iPhones at work. As usual, media headlines want you to click through to their articles, so you would think iPhones would not be allowed in China at all. If you read through it though, it was specifically Beijing, ordering official workers for central government agencies to not use their iPhones or other foreign branded devices. So not just iPhone, although iPhones are the mobile of choice. At the time there was no clarification from China's State Council Information Office. A week later though, it was confirmed that China hasn't banned its iPhones, and confirmed no laws or regulations were in place prohibiting government employees. It is not far-fetched to imagine that this could be true. The fact that it dropped in price by 8.1% on the news shows how much of a powerhouse China is. After China confirmed the reports were not true, it bounced back up. It then has seen a continued decline. Barron's reports that demand for iPhone 15 models are mixed. The iPhone provided $205.5 billion of the company's total revenue in 2022. Sales fell 4% from the year earlier. Apple put this down to the foreign exchange rates and uneven economic environment. This is something that has not improved, so it is cause for concern. On top of this, the rising bond yields have hurt growth stocks. Personally, I see this as a short-term issue. I've had an iPhone since 2009, starting with the 3GS model, and continued to upgrade every 2 years when my contract was up. I've never considered switching. You know where you are with it. Very easy to use, and that is how a lot of customers feel. Key iPhone statistics as of 25th of September 2023 states that there are more than 1.46 billion active iPhone users. They account for 21.6% of the world's smartphone population. 225.3 million units were sold in 2022. Apple's key product is going nowhere. The subscriptions for cloud storage, the App Store, Apple TV, and pure brand powerhouse and status of iPhone being the king of mobiles is not going to change anytime soon. That is why I continue to buy the dip. The yield is now 0.6%. Dividends are paid quarterly in Feb, May, August and November. The next payment of 24 cents is paid on the 16th of November and the ex-cut-off is the 10th of November. Tip ranks have an outperform rating of 9 with a consensus of moderate buy. They have an average 12-month price target of $202.77. That is 21.5% upside from where we are today based on 31 analysts. Next up, Johnson & Johnson, ticker symbol JNJ. I purchased 2 shares for $151.42 for a total of $303.84. These 2 shares take it to a total of 20. I have an average buy price of $160.79, so again looking to average down while I can. J&J just hit its 52-week low. Even after Q3 earnings were better than expected, litigation over its talcum powder products aren't going away. Plus, in general, big pharma companies are suffering, including Pfizer, Moderna, and Bristol Myers Squibb, all hitting 52-week lows. Part of the blame is the potential impact of the Medicare drug pricing negotiation program. Because of the new drug law, Medicare is able to negotiate directly with drug companies to improve access to some of their costliest single-source brand name Medicare Part B and Part D drugs. Looking at historical data, J&J has been paying dividends since 1972. The company has been through many ups and downs in this time period, but those dividends keep coming in. If we look at the history graph, we can see the upward trajectory of all those dividend increases over the years. They're planning for the future, innovating and changing things, so I think this dividend is safe and it will continue this way. The yield is now 3.2%. Dividends are paid quarterly in March, June, September and December. The next payment for $1.19 is paid on the 5th of December and the ex-cut-off is the 20th of November. Tip ranks have an outperform rating of 8 with a consensus of moderate buy. They have an average 12-month price target of $177.49. That is 19.12% upside from where we are today based on 18 analysts. Next up is Realty Income, ticker symbol O. I purchased 8 shares for $49.47 for a total of $395.18. I've continued to load up shares on the price while it's been falling, dollar cost averaging each month. I've now hit my 100 share target. I'll talk about it in this video here if you'd like to know more. The video has been really popular. There are a lot of passionate Realty Income investors out there. Now at 100 shares, my average buy price is $59.05. In very recent news, Realty Income is buying Spirit Realty Capital in a $9.3 billion deal. Sumit Roy, Chief Executive Officer of Realty Income, said in a statement, Spirit's assets are highly complementary to our existing portfolio, extending our investments in industries that have proven to generate durable cash flows over several economic cycles. As an investor, this is exactly what you want to hear as economic turmoil continues. I think this is a big win for Realty Income investors, and we'll see it continue to increase revenues. The yield is 6.1%, dividends are paid monthly, just over 25 cents each. Next payment is the 15th of November, and the exit cut-off the 31st of October. Tip ranks have a neutral rating of 7, still with a consensus of moderate buy. They have an average 12-month price target of $62.80, which is 26.13% upside from where we are today based on 10 analysts. Next up, T. Rowe Price, ticker symbol TROW. I purchased 1 share for $99.88. This 1 share takes it to a total of 8 with an average buy price of $105.51. I'm glad I only bought 1 share as it has dropped quite a lot since then. There are so many stocks down at the moment that I would like to buy, and I think T. Rowe will be down for a while, so I have time to pick up some more over the next few months. I posted a video on T. Rowe here. The yield is now 5.3%. Dividends are paid quarterly in March, June, September and December. Next dividend payment of $1.22 is paid on the 28th of December, and the exit cut-off is the 14th of December. Tip ranks have a neutral rating of 5 with consensus of moderate sell. They have an average 12-month price target of $100.70, which is 7.74% upside from where we are today, based on 10 analysts. I can see it trading sideways for a while, but in the long run, I think it's going to be fine. Next up is Vanguard S&P 500 ETF, ticker symbol VUSA. Purchased 11 shares for approximately $80.47, which is roughly $885.17. Again, adding to this position as I continue to dollar cost average in each month. The latest purchase takes up to 65 shares with an average buy price of $80.63. The yield is currently 1.6%. Dividends are paid quarterly in March, June, September and December. The next dividend estimate will be around 28 cents, which is paid on the 27th of December, and the exit cut-off is the 21st of December. Now, after all that, my total November spend is $1,851.94. Now, what does my investment provide in terms of dividends? This would give me an average quarterly dividend of just over $13.06, and annually the total payments would be $52.25. As a percentage of that investment, that would give me a yield of roughly 2.82%. So that wraps up this month. Thanks for watching. As usual, if you've enjoyed the video, please like and subscribe.